Do you know how to use the market volume profile for optimal trade locations? This is going to be a tutorial on different things to look at with the market profile. We'll first just look at the market profile, and then we will get into a chart with the actual candles. But first off, just some principles with the market volume profile. You see the blue on both sides, and you have gray here. The gray is known as the value area, which is where a majority of this day spent. This is 70% of the volume happens in this gray area, and you can change that if you want it to be 80%, but 70% is pretty standard for using a volume profile. This is the entire day. It started at when futures opened the day before and then through close of the next day. And some thoughts about trading around these profiles is you want to look at the previous day for trade locations for today. So for this day of trading, I want to look at this profile to find locations, break for breakouts, reversals, and now let's get into what that looks like. If it's within the value area, you can expect the market to be slower, expect it to be more choppy, and it's not really ever a good idea to take a trade within the middle of this value area. That's kind of just a basic rule that I have. But when you get to these edges of the value area, if you're inside and approach the top, you could be looking for a reversal back towards this is the point of control. This is where the most volume is traded. You could reverse back there. You can reverse all the way back across. So if you're within here, you're looking for reversals, and then if it goes all the way across, probably a take profit area. If it goes up here and breaks outside, you'd be looking for a breakout. Ideally, it's going to go out, it's going to come back, it's going to retest the top of this, and then it's off to the races. And so another thing you want to take note of is these where volume really goes down. Like even in this value area, this location, you can see how there's such a small amount of volume that was traded here. I would okay, so I would change the color and have that there, be looking for that. And then I'm also going to make lines, horizontal line here, and also on the top. I do this so then I can take either this indicator off of my chart. I could keep this on a larger time frame and keep regular candles to have two charts going at the same time and then have a smaller time frame. But that's ultimately what you're looking at. You want to look at the previous day. You want to look at these low volume nodes. In the middle of the profile is a no trade zone, at least for me. If you're inside, you want to look for reversals here, back down, back up. The range days will typically stay within the previous day's profile. And if you're looking for breakouts above. So let's look at a chart with the actual candles with those kind of basic ideas. This is just today. I'm not cherry picking any data to have a perfect profile and stuff, but you'll see how these are these ideas do play out. So today was a freaking ripper. It's January 19th, 2024. It's absolute ripper once the market opened. So the market opened above the value area high. So there's really, not a ton of context here. If the market had sold off, it sold off to the previous day high. That's, just a different kind of location, not, and you can even see that within the profile. So you could mark the previous day high and look, that's right where the market came down to. right when the market opened. The day before. Again, you want to be looking at the day before. So I'm looking at this profile while I'm trading this day. Again, remember, in the middle of the profile, not a great place to take a trade. And why? I mean, look what's happening here. A whole bunch of chop. A lot of chop. So you can see U.S. market open. It opens here. It's above the value area high. I would have drawn a line here. So I'm looking for expansion. I'm looking to play a bounce off a retest. Or if it goes down and gets inside, I would like to see a retest and drop. So it's just kind of really good locations to take trades. But as you can see, once the market opened, pretty choppy here. It ends up selling off, and it sells off pretty much exactly to this value area high right here. It doesn't get below it. It can't close below it. Right when it gets back outside, I'd be looking along, and then sure enough, the market perfectly went up. Moving on back, this day, the day before. Again, we're not cherry picking data at all. We're literally just looking through days and how it moved around it. And this does not change at all once this day starts. So it's not, you could be live time. This is exactly what you'd be seeing. So let's just look at what happens with the market open. Where is it open? Market open doesn't even, we open below this. If you open below there, I mean, you're looking to short a retest of this. Again, if it re-entered, you may want to be looking to get long, but just being aware you're below previous day value. You're looking short until this is reclaimed. So there's a guy named James Dalton who has some books. He actually has some very in-depth YouTube videos. He is who I learned most of this from, and he's maybe a pioneer of the profile. So if you feel like digging even more into this stuff, I would recommend his resources. I do think, from someone who's traded the profile for a while and has read those books and watched those videos, it's important not to overcomplicate it and the ideas behind it. So like, just to round it up, is you have your value area here. If you're in the middle of the value area, it is likely to be choppy. If it's bouncing around, you could see it being pretty rangy inside if it gets towards the edges of the value area. And if it gets below, you could be looking for breakdowns. You could be looking for breakouts. And also in the bigger picture of the volume profile, if you're just going to, mark these value area high, value area low, low volume nodes, and then previous day high and previous day low, I think that would give you some really good trade locations to just become more efficient in where you're taking trades. If you only took trades at these locations relative to what the market is doing at those spots, I think you would start to trade less. You would have more accuracy, and it would ultimately just help your trading and your win rate, most likely your profit factor, just things you're looking for. The market profile is, you just have to mark it up from the day before. Like today's has printed. It's Friday, so nothing tomorrow, but I could go ahead and mark these levels. Here's just kind of a big air gap. Air gaps can close just as fast as the market went through it. It can go back down. Ultimately, this is kind of a big zone that can be tricky to play, but a pullback all the way down to here, if that happens, pretty unlikely. It'd be a pretty big drop. It's a high up day, but this would be a good place to long. And then these little low volume nodes, if you want to get a little more granular, if you're scalping or something. So I hope this helped. It should help if you add it and have these pretty simple principles, but just different ways to get some trade locations. So I hope you learned something, and happy trading.